Bitcoin in 2026. Is it a bull run or a bear trap? Late 2025 was brutal. Bitcoin lost over 30%, dropping close to $80,000. That's over $1 trillion wiped out in just 6 weeks. So what's next to 2026? Well, the opportunity looks quite compelling. First, liquidity is improving. Central banks are cutting interest rates, which historically has been good for Bitcoin. And when borrowing gets cheaper and cash floods the system, non-yielding assets like crypto tend to benefit. Bitcoin is also harder to find. Miners are now producing half of what they used to, and most Bitcoin isn't even moving. It's stuck in investment funds, company vaults, and wallets of people who aren't selling. So what's left on the market? Apparently not much. That's potentially good news for the price. Less supply and steady demand means prices push higher. Overall demand still seems to be solid. Over $50 billion flowed into spot Bitcoin ETFs in the past year, and most of that money hasn't left. Most serious forecasts now put Bitcoin between $120,000 and $170,000 by the end of 2026. Some go even higher. Fundstrat, for example, is calling for $400,000 plus. And JP Morgan's model suggests $170,000 if Bitcoin keeps attracting capital like gold does. So what are the risks? The late 2025 drop from around $126,000 to $80,620 might not have been just a correction. It could have been the market topping out. If you look at Elliott Wave theory, Bitcoin's rally from $16,500 in 2022 to $126,000 in 2025 may complete a full 5-wave cycle. That means the recent drop could be the start of a longer correction that lasts into mid-2026. Key levels to watch out for in this scenario are $80,000, $70,000, and $58,000. Those are the areas where past cycles found support. Other things to watch are if economic conditions worsen, investors might pull money out of Bitcoin ETFs fast. And crypto exchanges are still getting hacked. One just lost over $1.4 billion. And some crypto companies might get kicked out of major stock indices in January, which would force funds to sell billions in Bitcoin. So what's the verdict? Bitcoin heads into 2026 with strong fundamentals, limited supply, improving liquidity, and institutional demand holding. But that recent breakdown towards $80,000 opens up the possibility of a longer and deeper correction towards the $60,000 region.